Hey guys, what's up? Alec back with the daily stock market, and look at that. We had a big red day on Friday with Amazon down 8.45%, Coinbase down 4, down 7.6%, and the list goes on stocks that were down on Friday. Make sure you're strapped in once again because we have another big earnings week coming up this week. Huge earnings week with Pinterest starting it off Monday after the close. We also have Activision Blizzard, which are two important ones to look at with Snapchat earnings already taking place. Pinterest can be interesting. Microsoft also with Activision Blizzard. Tuesday before the open, we have Royal Caribbean Cruise Lines, BP, another oil company. After the close, we have Enphase Energy and Chipotle, two huge companies reporting Tuesday after the close. Wednesday, before open, we have Uber, CVS, two more huge companies. And then after the close on Wednesday, we have Walt Disney, Affirm, Robinhood, MGM Resorts. So needless to say, Wednesday is going to be one of the busiest days for earnings this week. Moving on over to Thursday, they have a busy earnings day themselves with Pepsi reporting, cannabis growth company, Hilton, Kellogg, Toyota. After the close, PayPal, Cloudflare, Lyft, Expedia, Aurora Cannabis, and more all reporting. So it's a huge earnings week. Make sure you stay throughout the whole video and into the end of the video so you don't miss out on any updates or predictions on Disney or Affirm, Enphase Energy, Chipotle, PayPal, and others. And if you want some of my premium picks and signals on what to buy, sell before earnings happen, make sure you message me on Instagram to go ahead and get full access to my close friends list. Okay, click on success number 7 if you want to see all the positive success that other students just like you have been having. Over 2,000 students now enrolled, and we can see all the success just from 5 days ago. Here we see results will not stop pouring in. TSM puts are now up 100 plus percent, 139%, and the list goes on and on. Here we see someone's total portfolio was up 15%. Also, our new Discord group that we just opened up gained 250 followers overnight. So if you want to get a part of that, make sure you message me on Instagram. I'll send you over an invite. Students making up 41% calls, over $500 gains, and the list goes on and on with students that are making money. $1,500 gain, 126% gain. So check out success number 7. Message me here on Instagram if you want to join. Now back to the video and the earnings calendar. The first one that we're going to be talking about in this video is going to be Uber. Now up 11% on the week and 31% in the last month. So the question is, can it sustain this rally going into earnings? Now, we did see a good resistance here at $32 per share. It hit September 14th. It hit it again on August 11th. And then it was retesting it on November. Just on Friday, we retested that same $32 support. We broke above it into $33 per share, where Uber is now trading at. Remember, technicals are less important when you're looking at a company reporting earnings. Fundamentals are going to be more important. So let's look into it. And sorry, by the way, my nose is a little bit stuffy right now. I have a cold, so if I sound a little bit congested, that is the reason why. Here we have Uber stock accelerates into Q4. Chip leaders. Okay, so starting off, when will Uber be reporting? Uber's scheduled to report fourth quarter earnings. Market close Wednesday, the 8th of February 2023. What should traders look out for? In Q3, Uber recorded a net loss of $1.2 billion, $500 million of which was attributed to revaluations of Uber's equity investments. In Q3, Uber recorded a net loss of $1.2 billion, $500 million, which was attributed to revaluations of Uber's equity investments. The company beat analyst estimates for revenue, which grew by 72% year over year to $8.3 billion, and reported adjusted EBITDA of $500 million, exceeding its guidance of $440 million to $470 million. Uber CEO Dara noted that behind the strong performance, several tailwinds were in place, including cited reopenings, travel boom, and more broadly, a continued shift to consumer spending from retail to services. Okay, so she's saying that it might not last long. We could have just had a tailwind from everyone wanting to travel all at the same time after being cooped up for so long. With those trends expected to continue, however, the CEO provided upbeat guidance for Q4, which is actually great and goes against what my theory was. And the CEO said he expected gross bookings to grow in Q4 by 23 to 27% year over year, and adjusted EBITDA to be 600 million to 630 million. So it sounds like they could actually have a good earnings report after that guidance for the Q4 was expected to grow and be strong just like the last quarter was. So if you want to look at the last quarter's performance, that could give you a good indicator of how they're going to perform in this quarter also. How does Uber measure its performance? Uber has three main operating segments under which the company then measures its performance via the following metrics: gross bookings, revenue, and adjusted EBITDA, all of which will be scrutinized for growth when the company reports. The mobility segment is Uber's flagship ride-hailing services, which connects customers to drivers. In Q3, the revenue grew by 73% to 3.8 billion year over year for adjusted EBITDA of 893 million, excuse me. So that's looking great in the mobility segment with revenues growing by 73%. And if they beat revenue estimates, that could also be a huge thing for Uber earnings. The delivery segment provides a platform for consumers to search for food and either pick up their meal at a restaurant or have it delivered. And that segment grew revenues by 24% year over year to 2.8 billion. The last one is the freight segment that connects carriers with shippers on the Uber platform and provides upfront and transparent pricing. That segment in Q3 grew 336% for an adjusted EBITDA of 1 million. As you can see, there's lots of things to consider with Uber earnings, and we're going to be talking about it all in the Discord. Close friends list members are all going to be talking about it, so join the group now to see what other members are taking out on Uber, if they're going to be buying or selling calls or puts. And if you want to join the close friends list, you can get alerted on exactly which strike prices and expiration dates I'm taking. And the next one we're talking about is Disney stock at $110 per share currently, up 21% in the past month. So like every stock in the stock market in the last 1 month chart, they've been on an absolute rally, still down 20% in the last year. We see a pretty strong resistance around $125 per share for Disney. Let's dive a little bit deeper in Disney. They are reported to report a decline in EPS. Okay, what Wall Street expects from them. The upcoming results will mark the first quarter with Bob Iger back at the helm. Bob Iger has previously served the CEO of Disney from 2005 to 2020. His return just recently in the last fiscal quarter follows the immediate dismissal of his successor, Bob Chapek, and was upon the request of the Disney board. Box office sales are expected to support revenue growth for the group of Disney, obviously, with the latest Avatar movie having grossed over $2 billion. Subscription numbers for Disney Plus, Hulu, and ESPN Plus will again be in focus and scrutinized, determining the success of the new package bundle offerings. Disney's parks and recreational services had a phenomenal return to growth in 2022 post-lockdowns, and the markets will be looking to see whether this momentum has been continued with higher tickets prices to support it. Markets will also be looking to see the health of linear network television for the group and hear further about restructuring initiatives pertaining how to trade Walt Disney. Okay, revenues of the quarter 7 are going to be up 7% year over year, which are projected. Earnings are going to be down 25% on the EPS. So that's projected. We have 7 strong buys coming from analysts, 17 buys coming from analysts, 6 holds, 0 sells, and 0 strong sells. Okay, so they could have a great earnings, but that EPS coming in at negative 25% year over year could be the crux of the matter. Okay, here we see from a retail trader perspective, As of the 3rd of February 2023, 97% of Instagram clients with open positions on the Walt Disney Company expect the price to rise over the near term, while 3% with open positions expect the price to fall. Here we see some technical analysis going on. The share price of Disney has recently broke above the 200-day simple moving average. This suggests that the longer-term trend is no longer down. The 20-day MA, the red line, has also recently crossed above the 50 MA, the green line, suggesting that the short to medium term trend is now up. So it could be a good time to start dollar cost averaging into Disney again for long-term investors. In summary, Q1 2023 results are expected to be released on the 8th. While revenue is likely to have increased against the prior year comparative period, earnings are expected to have declined. Consensus broker ratings suggest that Walt Disney Company to be a long-term buy. Most IG clients with open positions expect the share price to rise in the near term. The price trend for Disney appears up, although overbought at current levels. So waiting for a dip below $100 per share again could be the best place to enter a position for Disney long term. Now let's take a look at PayPal earnings because they're still under $100 per share. Now they're only up 9% in the past month, so they're not up nearly as much as some of these other stocks are. They're actually up less than the S&P 500. We can also see in the last 3 months, they're only up 13%. And then last year, they're still down 31%. With the 5-year chart only at a 12% gain now, you're basically getting in at the same price as PayPal was in 2018. And they've grown revenues tremendously since 2018 and also grown EPS. They're still down from all-time highs, around 71%, 72%, and they had an all-time high of $308 per share. Currently with a 43 PE ratio, one of the best PE ratios surrounding PayPal. Let's dive into their earnings to see if they are a good buy for earnings. But some bullish things quickly to note about PayPal. PayPal's long-running experience in online payments is as a unique asset that is becoming more valuable as e-commerce becomes a bigger piece of the pie, which is just going to keep growing and growing over the next decade. The scalable nature of the business should allow PayPal to improve its margins over time, another very important thing to consider. And there is also still plenty of runway for growth in electronic payments. Electronic payments only surpassed cash payments on a global basis only a couple years ago. So that's insane to think about, the huge runway of growth for electronic payments and e-commerce as a whole. Now here we have an interesting article, stocks to sell, PayPal. I believe shares of PayPal will underperform in the weeks ahead as investors position themselves for a disappointing earnings report from the embattled digital payment provider. PayPal's financial results for its fourth quarter are due on Thursday after the closing bell and are once again likely to take a hit from the slowdown in core e-commerce business due to a combination of unfavorable consumer spending and customer demand trends, as well as rising competition in the mobile payment processing industry. Okay, based on moves in the option markets, traders pricing in a possible implied movement of 9.3% in either direction in PayPal shares following the update. So PayPal is going to be a heavily traded stock on earnings because there is a projected 9% movement, and option traders could make a lot of money off that kind of movement. Unsurprisingly, analysts have slashed their EPS estimates by 16% in the 90 days leading up to earnings report. Consensus calls for, and here before we go over the next part, here we can see some EPS estimates. We can see some revisions up and down. We can see the change is negative 16% like we already went over in the article above. Consensus calls for the digital payment processing company to post earnings of $1.20 per share as investing.com increases 8.1% from EPS of $1.11 per share in the year ago period. So they could be reporting an 8% gain in EPS. Meanwhile, revenue is seen rising 6.8% from last year to $7.3 billion. PayPal said last month it's planning to lay off 7% of its workforce, or roughly 2,000 employees, a move in line with San Jose, California-based company's previous commitment to rein its costs, which could be actually a good thing for PayPal. Despite the year-over-year improvement on both the top and bottom line numbers, I think PayPal's management will be prudent in its guidance for the year ahead due to the challenging operating environment and slowing e-commerce trends. In addition, I believe that the growing popularity of Apple Pay and Block and also Zelle will negatively impact PayPal's growth in the near term as it becomes increasingly vulnerable to the losing market share in online payments industry. The company also faces fundamental uncertainty from recent news that several big banks, including JPM Chase, Bank of America, and Wells Fargo, are working together to launch their own digital wallet that customers can use to shop online by the second half of 2023. So that could hurt PayPal a bunch also. PayPal stock, which fell to bear market lows to $66 per share in late December and closed at $85 per share on Friday, at current valuations, the giant has a market cap of $97 billion. We also have a really awesome bot in our Discord. If you are an option trader, this is the place that you need to be. Here, if we type in flow heat map, and you can see other students use this stuff all the time, you can see what options, what expiration dates are the most popular, what strike prices are the most popular, and we have detailed videos going over how to use all these charts also. Now, if we do a flow summary on Disney, we can see that there with the premiums, there's actually more calls coming through. There's more volume on calls. There's more open interest on calls as well. So then we would look at this Disney flow heat map and look what are the popular calls, and we see expiration date 2/10. Strike price 115 is one of the more popular calls. So if you need help picking out calls or seeing where the options going, where the big money is going, we have that all laid out on our Discord. We have daily option signals. We have weekly option, premium option signals. We have day trade signals, where to enter, where to exit, stop loss, with prices to get in and prices to sell at also. So DM me here on Instagram if you want to become a full access member now. Thank you guys for all the love and support you show on all the videos. Share this video with a friend. Like this video. Comment what you want to see below next. And as long as you keep dropping a like on these videos, I'll keep making them for you guys. So I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.